Markets trade in the green, Nifty near 21,900. Gains led by TCS and Airtel, while the Sensex trades above 72,000. Broader markets marginally outperform. Most sectors trade in the positive, led by major rally in the IT stocks. Metals come out as a top loser, dragged by AP and Apollo. And Paytm is up almost 6% after hitting lower circle in the last 3 sessions. Meanwhile, Jio Financial Services denies reports of buying Paytm's wallet business. And shares of Bharti Airtel trade over 2% higher on back of strong earnings. Citi reiterates a buy call with an increased target price of $12.70. Prime Minister Narendra Modi kicks off poll campaign, says BJP will get 370 and India 400 seats in the and the NDA 400 seats in the upcoming Lok Sabha elections. Hello and welcome. This is Samina Nalwala and you're watching the F&O Show, where we take you through all the derivative action in the markets. But first up, a quick check on how the benchmark is trading. It's a flat sideways day of trade on the Nifty and the Sensex. The Nifty trades sub 21,800 and broader markets also performing in line with the benchmark. The breadth of the market also is more or less a 50-50 picture. A whole bunch of stocks that are actually losing, but you've also got a few that are gaining on the upside. In terms of the top stocks on the Nifty 50, on the gaining side, HDFC Life is up 3% TCS is up 3%. Bharti Airtel on back of earnings looks good. BPCL continues its upway move, 2% gains on BPCL. So OMC's IT are the big talking point, and insurance counters also having quite a field day in today's trade. On the sell side, ITC, Britannia, Hindalco, Apollo Hospitals, RIL are trading soft. Across the broader markets, the top stock of the day is Triveni Turbine. Stellar set of numbers. The counter gets rewarded, trades the gain of 12%. Yes Bank as well up 8%. IOB, Praj Industries, Paytm are all trading with a positive bias. On the sell side, a whole bunch of names that are reacting to earnings. Suven Pharmaceuticals, a huge miss on earnings. The stock trades the 9% cut. Prince Pipes disappoints the street, 6.5% lower. PSC as well, quarter on quarter, those numbers don't look good, and the stock gets a sell this morning, down 5%. So all in all, it's all about earnings reaction. But Agam, beyond that, the benchmark itself is missing and lacking cues. If not a price, a time correction, very much on the cards, I'd imagine. Most
certainly, because Samina, you hit the nail right on its head. It is consolidation that we are looking at the moment when it comes to the benchmarks. Remember, we've tested 22,000 twice in the last couple of weeks, and we've seen the Nifty come off. And at the moment, it does seem like there is stiff resistance around that mark. Well, that said, Nifty is flat at the moment, but we are seeing a little bit of an increase in open interest towards position building. Cannot necessarily determine if this is towards the long or the short side. But moving on to the Bank Nifty, well, there is a little bit of weakness coming through here. Down 0.6% for the index and 6% added towards open interest. What could potentially be deciphered as shorts, but that is still yet to be determined. Now, in today's day of trade, even as the Nifty hovers around 21,700, 21,800, well, we are seeing a little more activity. We'll round it up around 21,300, 21,400. A little bit more put writing coming through out there. Where does that stack up in terms of max OI? Well, overall, this is, of course, the Bank Nifty, and we are watching out for 46,500 on the higher end. That's where we have max OI as far as calls go. And in max OI puts, it's around 46,500 point range between today and tomorrow. Since tomorrow is the Bank Nifty expiry, we'll be watching out for that one as we move in through the course of the next couple of sessions. That said, let's take a look at stocks and see how things are panning out there. And we do have shorts building up in Ashok Leyland, but besides that, Ipca Lab, Alchem Labs, SAIL and ONGC, pharma companies and oil and gas companies are looking at an further up move with longs building in there. In terms of stocks which are seeing unwinding, let's pull that up as well. For all the stocks which are seeing a decline in open interest, short covering for IGL, UPL, Pidilite, Bharat Forge and SBI Life. So we continue to keep an eye on this, and of course, potential consolidation on the cards for the benchmarks for now, Samina.
Right. Those are, of course, all the market movers in trade this morning. But BLSE e-services has listed at a 129% premium just a few minutes ago. So the resting comes in on a day when the markets are actually not looking too buoyant. Well, listen in to what the management has to say. We did catch up with them earlier in the day. They talked about the growth trajectory going ahead. Here's a slice of that conversation.
BLS e-services is in the business prime of Digital India. We are providing services under Digital India across the length and breadth of the country. We have more than 98,000 touch points spread across all the states and union territories of India. In this business, we provide services under 3 segments. First is the business correspondent to major public sector banks and private sector banks within India, where we work for banks like State Bank of India, Bank of Baroda, and in private sector we work for banks like HDFC, Karur Vyasa, amongst other banks. We work with more than 15 banks now, wherein people in upwards of 24,000 centers spread across India. People come for banking transactions like opening of bank account, deposits of money, transfer of cash. This infrastructure is mainly provided in the semi-urban and rural part of the world, part of India, for making inroad into the the unbanked population of the country. Then we have a segment which is the e-governance segment. How we work in our parent company in visa outsourcing. Similar kind of model is adopted here, wherein we work with different states in India like UP, Rajasthan, Karnataka, West Bengal, different kind of government services like birth certificate renewal, driving licenses, arms licenses, Aadhaar, PAN card. Things are outsourced to us by the local state government department on an exclusive basis, wherein we operate the center. We have a steady footfall of customers that come exclusively to us to avail these services. And then the third segment is assisted e-services. Now we have a footfall of around 4 lakh people that come to our centers every day for availing either the business correspondent services or the e-governance services. So we were thinking what way we can upsell and cross-sell different kind of products or services like insurances, demat account openings, bank KYCs to the existing customer base. So that is the third segment, assisted e-services.
Okay, Shikhar, going forward, is this mix likely to change? Where's the bulk of the latest demand coming in? What businesses is it coming in? I know you've already elaborated to a certain extent. Banks, I reckon they're their largest clientele. But going forward, how does FY25, FY26 look like?
Correct. So if you see last year, the business correspondent contributed around 66%, followed by 24% from our e-governance, and the rest business came from a fairly new assisted e-service business. This is mainly because, we acquired certain companies in the last 1 or 2 years that led to a boost in revenue in this particular segment of business correspondent. But having said that, going forward, we see that, we see good growth coming in from all the segments, wherever we are operating. In the business correspondent segment, if you see now, we started working with only one major public sector bank. Now we've empaneled many other banks. We are in the process of expanding into different banks, expanding the reach across additional network. Even banks are now adding additional products. So we are getting incremental revenue from the same touch points. So we see good growth coming in from the business correspondent sector. Having also the e-governance sector, if you see, the model is phenomenal. We open centers at our own cost. People get services in a timely manner. Government, is happy. Customers are happy. So we see this model evolving into different states. Land record registration services have been outsourced to us in West Bengal. Other states are also considering outsourcing. So we see good growth coming in from all the segments of the company.
Right. So, Shikhar, from what I understand, you guys are net free cash flow positive. You guys are debt-free. Given the kind of plans that you guys have on the anvil, will your internal accruals be enough for you to go ahead and expand, or would you, in fact, perhaps look for some sort of debt going forward sometime in the future?
See, at BLS, first of all, I would like to mention that we like these kind of businesses. We like running companies which are mostly debt-free, negative working capital business, upfront cash collections. A similar model we followed in BLS e-services. It is a negative working capital business. It is throwing money. We are generating good profits, cash flows, but we are looking, at different kind of investments within the company. Also expanding on inorganic basis. So definitely, the money that will be raised through the IPO, certain part will be used in inorganic expansion. The money that will be generated from the profits of the company will also be used for further growth, be it acquisitions or investment within the company.
Well, that's the management of BLS e-services talking to us about what the future holds. And it is looking good at the moment, at least as far as the debut is concerned, 140% higher than its issue price, currently at 323 rupees per share. But with that, we shift focus back to the futures and options space. Let's get in our experts for today. We have Ruchit Jain of 5paisa, and we also have with us Dhwani Patel of Finversify, who's joining us on the show. Thank you so much for joining in, both of you. Dhwani, I'll start with you. Your view on the benchmarks right now, consolidation on the charts. Do you expect some sideways movement in the near term?
Good morning, Agam. And talking about the benchmarks right now, we definitely saw Nifty making an all-time high, but post that we could not sustain those levels, and from there we are seeing a slide down in the past 3 days. I'm holding a cautious view over here on the benchmark. The next level that I'm looking on the downside to act as a good support is 21,675 on the spot level. If we break those levels, then there is more profit booking coming in on the index. But for now, 21,675 is an important crucial level on the intraday chart as well, which is noteworthy and has to be watched out for. Bank Nifty, if we're talking about, has seen more pain as compared to Nifty. We are seeing the fall being very intense over here. We failed to make an all-time high on the Bank Nifty, so it was lagging in performance, and that is shown in the numbers as well. On the downside in Bank Nifty, the next level I would watch out for is 45,120 on the spot level. Once 45,120 is broken on the lower side, we'll see further pain coming in. But till the time that level is being intact on Bank Nifty, I'm holding a positive view. On the defense sector side, we are seeing FMCG taking some beating today, but IT has to be on the focus towards the defensive sectors.
Ruchit, how are you feeling about the index? Bank Nifty has been conspicuous by its absence in the last few days in terms of participation. And it almost feels like until they don't provide the support, the Nifty is going to remain sideways. Do you agree? And if you do, then what would the trade on the Nifty and Bank Nifty be?
Yes, hi, very good morning, Samina. Very good morning, Agam. Well, if you look at the benchmark index, I'll start with the Nifty first. So Nifty technically has formed a double top and a shooting star reversal pattern on the daily charts, which is definitely not a good sign. And this is an indication that we may go through some corrective phase in the short term. Now, generally, there are two types of corrections. One is a price-wise correction or a time-wise correction where index may not see significant down move, but we may see some consolidation phase in the short term. Now, the 20 DMA support in Nifty is placed around 21,630, which is the important level to watch out for. In case if we break that, then only we will assume that that some price-wise corrections would come in the near future. Otherwise, 21,630 to 22,000, 22,100, this would be the range where market would continue to consolidate. Yes, you rightly pointed out that Bank Nifty has been the spoil spot because the private sector bank especially has not seen any kind of long build-up happening over there. Although many of the PSU space has shown a good outperformance, but it's the heavyweights are more of from the private sector, and that's why this relative underperformance has been seen. Now, 45,500 is important from a closing basis, and in case if we see any close below that 45,500 mark, then I think the Bank Nifty has potential to correct further because 45,500 put options have about 27-28 lakhs of open interest outstanding, which could unwind in case if we see the index closing below that. And if you look at the options activity, then more of call writing has been happening in Bank Nifty, where the highest open interest of 44 lakhs is in 46,000 call option. Even 45,000 call option has seen about 35 lakhs of OI outstanding. So call writers are more focused on writing call options of Bank Nifty, which clearly indicates that the relative underperformance which is there in the banking index could continue.
Okay, well, stay with us. We will be slipping into a short break, but on the other side, we get you stocks and a lot more. Stay tuned in.
Welcome back. You're watching the F&O Show. The markets, like we said, are having a sideways kind of morning. But stock-specific action continues to drive the street. Richard, I want to talk to you about Bharti Airtel. I know the move may not be significant, but it's still up nearly 3%, and it's a heavyweight, let's not forget. On the charts, what does Bharti look like? Earnings, of course, on the fundamental side were given a thumbs up.
So overall, I think the broader trend still remains positive because we have of late seen that high top, high bottom structure. But I think the prices have already seen a decent up move in last one or two series, where the stock was consolidating around that 950 mark. From that, the stock prices have already seen a recent high of 1200 mark. There could be some short-term corrections in the stock, but corrections could be used as a buying opportunity if the stock comes around, I would say 1080, 1070 kind of range where major supports would come in. So one should keep a buy on dip strategy in Bharti Airtel as far as short to medium term is concerned.
Okay, it's a buy on dip strategy for Bharti Airtel. That's the view coming in from Richard. Dhwani, let's take a look at all the trading ideas that you have for us today. What are you recommending?
I have two trading ideas over here. The first one which I have is on Siemens. We are already seeing that on a short-term structure, the stock is showing a reversal, and the buying action is coming in this particular counter. It's a trading call, so a short target over here of 4280 to 4330 has to be chased with a stop loss of 4105. The next one I have is on Oberoi Realty. The stock has seen a beaten up coming in. It's a more of a mean reverting trade. So you buy at the current price. Target is of 1390 and a stop loss of 1299 has to be maintained. In both the cases, the risk reward is more than 1:2.
What about your picks? What are your top trades that you're recommending to our viewers this morning? Richard,
Yeah, I'll start with the short one, which is a short call in Crompton Consumer. So a low top, low bottom structure technically, and even if you look at the derivative segment, a decent amount of OI rise has been seen along with the price correction today, which clearly indicates that the short formations have been going on in the stock. So I think keeping a stop loss about 297, one can go short on Crompton Greaves for potential targets around 275. And Ipca Lab is the stock on the buy side, where long formations are seen, price up move supported by rise in open interest. Stock prices have already seen a consolidation of about a month. It just seemed to be a time-wise correction within an uptrend, and today's breakout indicates just a resumption of that uptrend. So Ipca Laboratories, one can buy on some dips in the range of 1180 to 1170, keeping a stop below 1140 for potential targets around 1250.
Richard, 2 to 3 stocks that I want to bring up with you. Tata Chemicals, numbers were a huge disappointment. The stock was very active in the F&O space over the last few days. Tata Motors, again, back of numbers, spectacular, but action-packed even before the earnings came through. Though, and sure, of course, while we're at it, if you've got a view on Paytm, after a 50% fall, it is trying to find a bottom at these levels. What's your take on these 3 stocks?
So I'll start with Tata Motors first, where the broader trend continues to remain positive. We have seen within the auto space, if you compare the stock with other names, then definitely there has been a good outperformance in this name. And I think there are no signs of reversal, so this outperformance could continue going ahead as well. Of course, from a risk reward perspective, since the stock has already seen a rally, so I would suggest that in case if we get any dips, then one should look for buying opportunities and declines. But if any existing long positions are there from mid to long term perspective, then those investors should continue to ride on this trend. Tata Chemicals, a bit of underperformance has been there. Some, I think, short formations were there in the stock, but today there are some signs of those shorts getting covered from lower levels. So at least a pullback move could be there for where 1020, where 1030 would become the next resistance on pullbacks. So not a great place to go short or go contra in this stock over here. But I think 1020, 1030 pullback move would be there where one can again take a review on the stock. And Paytm, of course, we have seen that 4 consecutive days of lower circuit. The circuit opened today and the price have rallied higher. But frankly, in technical analysis, just 1 day of up move is not enough to consider it as a trend reversal. But rather a series of high top, high bottom structures if starts forming in the near future, then I think one should take a view for any buying interest in the stock. So as of now, it would be just a pullback move. The trend has not changed technically for now, but hence no fresh buying recommendations in Paytm.
Okay, Dhwani, I want you to come in on Coal India. Of course, it's seen a staggering up move. In fact, it's doubled in the last 6 months, if I'm not mistaken. Currently at 442 odd. That's where the cash market number is. But it is an F&O stock. What's your view here, and how would you deal with Coal India? Can you initiate fresh longs even at these levels?
Talking about Coal India, Agam, we've already seen that the stock has given a good run up over here. So the broader structure over here stands on the bullish side. We have seen good volume participation also coming in on the upward rising green candles on the daily chart. What we are seeing on an intraday chart is interesting over here, where 450 is acting out as a resistance. So for me to initiate a new trade over here, 450 needs to be taken out in the spot level on immediate lookout, and after that we can expect further move coming in on this particular counter. Derivative data also suggests that 450 over here is acting out as a resistance, because we are seeing good amount of call open interest being built up over here. So on immediate basis, first 450 is to be looked out for. Once we break above that, we'll see fresh longs coming in here.
Okay, that's the view coming in as far as Coal India is concerned. And the other stock that I wanted to address was BPCL. Now, BPCL has also been on a tear of late, hasn't it? And it's just going from strength to strength. In fact, all the OMCs are. So it's HPCL, IOC, BPCL, all of them looking at strong momentum building of late. If you consider how things are panning out over the course of the last few weeks as well, you know, there has been a lot of strength coming through. Dhwani, your view on any of these OMCs, BPCL perhaps, if you could give us your view here, how would you address it?
So talking about BPCL over here, we are already seeing that in this week's session, yesterday's move has given a breakout above its previous highs over here. So the stock is definitely holding strength over here. And over on derivative side also, we are constantly seeing that there is a good amount of open interest addition. Currently, we are having about 4% of open interest addition in today's session itself. So definitely longs can be held out on this particular counter. Fresh entry is not suggestive over here. We will see some profit booking coming in, but for the ones who are already holding longs over here, the next stop loss that one needs to maintain is of 570.
Right. A couple of other names that are catching attention is it Triveni Turbine, Yes Bank, IOB, Praj on the upside, Zenzar, Ipca Labs, of course, Richard already mentioned. Anything on IT, Richard, that you're looking, which is looking constructive to you at this stage? One pick from the IT pack that you would maybe play for the Feb series?
VPRO looks quite interesting within the IT space. So during the results in the mid-Jan, we witnessed a good price volume breakout in VPRO. Second half of the January series was more of a consolidation where some correction was seen, but not a very high volume sell-off we have seen. Secondly, this entire consolidation which has happened post results, the 20 EMA has not been breached. So the 20 EMA has acted as a good support for the stock. So I think till the stock is trading above this 470 mark, looks quite interesting. I think for the rest of the Feb series, in case if the IT shows gives a good support for the market, then VPRO could be one stock which could head higher towards the result day high of 525, 527. So one can look for buying opportunities in VPRO with stop below 470 for potential targets around 527.
Okay, well, we have run out of time on the show, so I'm going to take a moment to thank both our experts, Dhwani and Ruchit, for joining us and taking us through their views on the markets. And on that note, it's a wrap on the F&O Show, but lots more lined up. Stay tuned to NDTV Profit.